the past few months, the market has totally given up on AI infrastructure. Even before the tariff-induced sell-off, this group's been rolling over ever since a Chinese firm announced that they come up with a cheaper way to create generative AI models at the end of January. Then we got the trade war worries, the recession fears, caused Wall Street to turn on many of the last year's biggest winners, including anything at all connected to AI. Hey, but you know what? We've seen zero evidence of a slowdown in the AI infrastructure build-out. In fact, CNBC's own Spencer Kimball, in this terrific piece that I don't think many people talked about, noted that executives from both Amazon and Nvidia said at an industry event today that there had been no slowdown in AI data center demand. None of the hyperscalers have said they plan to dial back on their massive capital expenditure plans, with the possible exception of Microsoft. But you know what? Microsoft was building these data centers on behalf of its partner, OpenAI. And now that they're going through a kind of a slow-motion breakup, OpenAI is starting to cover more of these costs itself. They recently raised $40 billion. They can afford it. So I've been saying that I think that the Microsoft so-called slowdown isn't as relevant as people think. Now, Nvidia is certainly not having any problem selling its high-end chips, aside from government restrictions on which countries they can sell it to. That has been a bummer. But it's a regulatory issue, not a demand issue. In fact, now that earnings season is well underway, we've heard from a bunch of companies connected to the AI data center theme. And you know what? They've been putting up pretty darn good numbers. It's almost like there was never anything wrong with the AI infrastructure story in the first place. Bye. Exhibit A came from yesterday. One of our guests on last night's show is a company called Vertiv. It's a company that makes power and cooling equipment for the data center. Now, this stock can come down 54% from its January highs to where it was trading right before the quarter on Tuesday night. Then Vertiv reports excellent numbers with easy top and bottom line beats and a 21% increase in orders just versus the previous quarter, the so-called late quarter. Management raised their full-year sales forecast, too. So it's no wonder the stock popped nearly 9% yesterday, another 7.5% today. It's one of the reasons why I talk about this stuff at the beginning of the show. Yet Vertiv's still down 46% from its high. It trades at roughly 23 times this year's earnings estimates, despite the fact that company's on track to grow earnings at a 25% clip. I mean, to me, that's just a steal, okay? I mean, to me, you know what? All aboard! Last night, we also had GE Vernova on the show. This is General Electric's old power division, big turbine maker for power plants. Management said that strong demand from data centers is driving medium-term orders for gas turbines, while generating plenty of interest in the company's nuclear business. This nuclear business is for real, people. So, look, if reports of the AI infrastructure theme's death were widely overstated, what kind of stocks can we justify owning now that they've come down big and people are not saying that there's any stability in the group? First, there are the chips that are at the heart of these data centers. You know I'm going to start with Nvidia. Now, I have become less enthusiastic about this, not because of Nvidia itself, but because of the political headwinds involved with Nvidia. We still got a sizable position in Nvidia for the Charitable Trust because I'm a believer in their technology. Nvidia stock's down more than 30% from its January highs, but it still looks pretty cheap. It's 24 times this year's earnings estimates. Keep in mind, those estimates have come down substantially after the effective federal ban on selling their AI chips to China, even the older ones. And that took my breath away, just so you know. Of course, some other semiconductor stocks can get back on track if the AI infrastructure spending never really went away. I like Broadcom, which we own for the Charitable Trust, very big position, and Marvell Technologies, because they make what are known as custom accelerators that provide additional computing power for these warehouses full of servers. Broadcom and Marvell stock are down 25 and 55% respectively from their recent highs. They're trading at very reasonable valuations now. Then there's ARM Holdings, another one I really like. It's a company that licenses its leading semiconductor architecture designs to chip makers, including Nvidia. Cadence Design Systems, a nice move in that today. Synopsys, they both work. They make semiconductor design software. Oh, yeah, and don't forget CoreWeave, which makes its own AI data centers, essentially allowing customers to rent its clusters of Nvidia GPUs. This stock's basically back to where it was trading when it came public in late March. If the AI infrastructure theme remains alive and well, I think CoreWeave could be an absolute steal here. All right, what else goes into the data center? Well, how about servers and networking equipment? This is a little trickier, okay? The leading makers of servers are Dell Technologies and Hewlett-Packard Enterprise. Sadly, both these companies have major tariff exposure, which is why their stocks, frankly, have just been slaughtered. But now they suffer 10 and 9 times this year's earnings estimates, respectively. So I'm wondering if the bad news has already been priced in. By the way, the sharp activist fund Elliott Management, they just announced a 7% stake in HP Enterprise last week. HP Enterprise, frankly, has not operated that well, but maybe Elliott shakes it up. Oh, by the way, I never bet against Michael Dell. If you do, I need you to do something. Please send me an invitation to your funeral. As for networking equipment, I'm a fan of Arista Networks, which is some of the best tech, but it's been hit extra hard because there's a lot of business with Microsoft, which has started to wobble with its data center investment plans. But as I told a caller who asked about Arista just last night, I think the stock has come down way too much. I mean, this thing is down 44% from its January highs. This is a fantastically run company. It looks interesting to me at these levels. You know what? I'm calling out Cisco Systems, too, long the market leader in networking equipment, though it's also made some big moves into software and by the way, and also cybersecurity lately. Cisco has been holding up much better than many of these other names, only down about 15% from its mid-February highs, 1.5. But it will roar once people get the memo that AI infrastructure spending never went away. It's very inexpensive versus its accelerating growth rate since it made a recent acquisition. All right, now, how about the utilities with nuclear exposure that roared last year because of the data center-fueled rise in demand for electricity? All right, here I'm talking about Constellation Energy, Vistra. You might have heard about Vistra during the stock draft earlier this afternoon. Now, these stocks have both fallen nearly 40% from their highs. These two stocks got overheated during the run-up, but they're now selling for barely more than 20 times this year's earnings estimates. They're selling for less than a lot of the traditional utility companies. I think that sounds like an opportunity to me. The strength in Vertiv's earnings also has me thinking about Carrier Global and Trane Technologies. These are two leading climate control plays that have seen major growth in data centers because you need to keep these servers cool. Now, these two are far from pure plays. They also got exposure to construction with real tariff exposure, too. But if Wall Street embraces AI, they can bounce. I cannot believe how low Carrier's fallen. I feel the same way about a number of classic metal bending industrials with big AI infrastructure exposure. Think Cummins. Boy, that stock's been just blistered. Makes big backup power generators. You can't have a data center go down. Tonight's guest, Dover. All right, they make these liquid cooling products, among many others. Or Eaton, another stock just been crushed. These are two that the trust owns. They make electrical power management. Hubbell, Parker, Hannafin, Powell Industries, all good. All of them. Now, again, these are very much cyclical companies, so you can't just buy them if you think we're headed into a recession. Most have seen their stocks get slaughtered because people think we are going into recession. But if we get a reprieve on some more these tariff issues and investors return to the AI trade, I just gave you everything that's going to fly again. Bottom line, when it comes to AI infrastructure, Wall Street's become very skeptical. And I don't think that's really changed. But looking at what we've seen so far this earnings season, I'm feeling much more sanguine about the story, especially if we get some more trade war de-escalation from the White House and stocks stay as cheap as they are. And, man, are they ever cheap. Let's get to Sonny in Illinois. Sonny.
Hey, Jim, I'm a club member and a loyal follower.
Yes.
Thanks for all you do for us
Sonny.
underdogs.
Thank you. Yes. That's how I feel.
I'm here with my 11-year-old son.
Booyah, Jim.
Oh, man. Familial booyah. I miss those. We haven't had a lot of them lately. Thank you, Sonny.
So, first of all, I think you need to give Regina, Jeff, and the rest of the crew a raise. They're working really hard overtime in this economy.
Let me get it. What do I have? What do I have? I have some money here. I know I had a couple of fives, I think, kicking around. Let me get back to you on that. All right? It's got them somewhere.
All right, so here's my question. So I have Apple and Nvidia. Can you give me some thoughts on Taiwan Semiconductor?
Taiwan Semiconductor is so low. I have to tell you, I look at Taiwan Semi. What do people think? Look, I have tremendous conviction that it's very difficult politically to say that we will protect Taiwan Semi. I will say this. That is one of the greatest manufacturers in the world. And anybody who thinks that Taiwan Semi should be this low, this cheap, is just not a believer in AI. And I am a believer in AI. There we go. And just take the 50. All right, based on what we've seen so far from the earnings season, I'm feeling positive about the data center build-out theme. I think it's good. Look, yeah. These stocks have just come down way too much more money, including one of the build-outers, Dover. Fresh off this morning's release, I think that stock's dirt cheap. Then after getting some tough home sales numbers today, I'm mapping out what I think could be on the horizon for the housing market. And all your calls, rapid fire, in tonight's edition of the Lightning Round. So stay with Cramer.
Don't miss a second of Mad Money. Follow @Jim Cramer on X. Have a question? Tweet Cramer. #MadMentions. Send Jim an email to madmoney@cnbc.com or give us a call at 1-800-743-CNBC. Miss something? Head to madmoney.cnbc.com.